Elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, YouTube? Welcome back to Goofy Investing, where we talk about investing in the stock market. This video is going to be about ticker S. S on my chest, there can only be one S1. All right. We'll take a look at the portfolio. I'll talk about why I'm bullish and, going forward with this equity. I'll expose my position, what we can expect with the valuation, how this investment proposition will probably play out, as well as far as how I see it and so forth. Okay. So currently we're trading on the New York Stock Exchange for $21.19 for ticker S, with a market cap of $7 or 7.26 billion on the market cap. All right. Year to date, stocks up 41%, 41.27% on the actual year. A full year out on past historicals is looking like 27.34%. Seeking Alpha, Wall Street, and Seeking Alpha Quant all got triple buy ratings here on this actual investor platform. Now, here's what's going to happen next week. Quarterly earnings report is actually happening, which is why I'm putting this video out now. All right, we'll go look at the portfolio. Portfolio's sitting good. S on my chest, my shares, I got 5,500 shares of S. Cost base is $13.89. We'll look and see where I deployed that capital. We'll go back to the chart, and all the way from here to the beginning of the year, all the way out to around April-ish, okay? This is where I've been positioning into the actual equity, where I have deployed $76,379.42 for my 5,500 shares. My stock is worth over $100,000 now. We're up 40 grand, up 52%. I did suspect a reversion back up to the mean on price action is really a cherry on top. Although this is how I position in my portfolios and how I do things as a growth investor. I position a year ahead of time, and then next year I judge performance based on management performance and everything, etc. Okay, so and even then, that year that I'm positioning, which is ahead of time, there's backstory where I may have monitored the equity maybe years prior to positioning, all right, and building my position. So, I saw this as an opportunity right here within this trading range between New Year's and all the way up to the beginning of the summer to just buy as much SentinelOne as possible. The way I see it with these cybersecurity companies and this whole AI insurgence race pertaining to the segment is you have to look at like a horse racing track. All right. Imagine you're on a horse race track and SentinelOne is one horse, CrowdStrike's another horse, Palo Alto, Fortinet, they all got their own horses, and then in the span of years, one may be ahead of the other, okay? And they're all racing, and there's a continual aspect of cutthroat competition in the field with the business model of high free cash flow margins and so forth. Very attractive business, high margins across the board on all of these competitors within the cyberspace, okay? So that's something to consider. What can we expect with upcoming earnings? All right. Well, we go back to Q1. Their actual outlook for Q2, they're guiding they're guiding revenues between 289 million and 291 million. We'll go back here to consensus estimates from the street. and I'll go on a quarterly basis, okay? And Q2 analysts got them doing 290.28 million, which is 19.86%. So what are my thoughts on if they beat or make, revenue? Well, if we look on some recency bias, all right, they've been missing these past couple quarters. They have not been able to keep up with consensus estimates. But Goofy, if they've missed 2 quarters, how is the stock up, 50% or, 40%, whatever year to date? Well, it's simple. It just comes down to valuation. The stock was so cheap, that the market will revert it back to the mean. All right, it was too far. The market, Mr. Market, shot S's stock down too far down. All right, to where it did not match fundamentals of sales growth and so forth. We'll look at sales growth from inception of time. We'll go back on an annualized basis. They did 46.5 million in 2020. Now they're doing over $1 billion in sales trailing to date. Okay, so I mean, the company is growing. What have you seen with the actual stock price? Stock price started high, went down, sales went up, and then recently, within the past, since New Year's, the market shot it over on the downside. Okay, so now we have a momentum of upward trajectory with SentinelOne. All right, now why am I getting more bullish on SentinelOne? All right, well, in combination with their actual annualized ARR, which is posting 23% year over year growth from the last quarter, and this flywheel effect with all their different products that they have to offer with AI analytics, autonomous AI, and the business structure of this platform compared to the landscape of the operating landscape of competitors and their dependencies. I'm bullish on SentinelOne. In combination with that low valuation, which we'll take a look at here. S trades here at a 6 times forward sales. Let's look at competitors and how they're trading on a price to sales. Okay, here we go. Trailing price to sales, 6.71 for S. Crowd trades at 37.97 times sales, and Palo Alto is trading at 24.12 times sales. Oh, but how come their sales multiple is compressed and they always trade cheap? Is it because they're failures, they're inferior? No, that is not the case. I'll show you why S trades at cheaper multiples. All right, we're going to take a look at margins. Okay, look how far away S is from profitability, from GAAP profitability, and look at the margin profiles on CrowdStrike and Palo Alto. Those two different competitors have encapsulated more sales and have kind of been around the block a little more. And with that, those businesses are ready to spit out GAAP profitable EPS. So whenever the market is seeing that a company is ready to spit out GAAP profitability on EPS, premium's going to go up, especially with a high gross margin and a great free cash flow business model such as the cybersecurity sector. Okay, reason why S is trading at multiples below is margins are further from profitability. In the 20% net income margins, negative 30%. I buy companies as the business is getting built up. I don't buy them turnkey, ready to go to spit out GAAP profitability. That's not how I operate, okay? So with that, I never said that S deserves to trade at 30 times, 40 times sales yet. They don't deserve to trade at it right now, but that doesn't mean they're not going to deserve to trade at it later, all right? What needs to be the flipping catalyst? Margin expansion. GAAP profitability, the trajectory towards GAAP profitability within the line of sight of 2 to 3 years of improvement. Multiple's going to go up on their sales multiple. Why am I bullish, ever so bullish on this? Well, I'll show you why. All right. This lady right here, the new CFO, okay, 25 years of experience guiding tech companies through scale, complexity, public market execution. But right here's the kicker. Right here's the kicker. All right. She led a company, another global SaaS company with 2.5 billion in annual revenue, where she aligned growth strategy with margin expansion and led significant capital structure initiatives. That's exactly what we need. She also, with that company, refinanced and structured $2 billion of debt. Obviously, there's less work to do with SentinelOne because they ain't got no debt. So she can focus on all that energy more so on capital structure for growth and margin expansion. Okay. That should accelerate the process of S's margins becoming more closer to GAAP profitability. This, I assess that the investment proposition with S is going to be that it's going to age like a fine wine. I had no problem making this my core scale play, okay, with the actual setup and the future demand of cybersecurity as we know it. All right. So that's something that's what I got. All right. As far as S moving forward, the upcoming earnings, what am I focused on? Am I focused on going back to if they're going to hit, if they're going to supersede on sales or what have you? All right. I'll address that. We may get a slight beat, we may get a slight miss. Either way, it's going to get close. But as long as they're growing, if they grossly miss, I'm going to be mad. All right. But if they're within their actual revenue expectation of what they guided between 289 and 291 or above, I'm going to be happy. Okay. So if they post 289 and they miss, I'm cool with it because they're doing what they said they would do. That is a pretty tight quarterly expectation of outlook from 289 to 291. It's like a $3 million or $3 million delta between those two. Okay. So that's 20% year over year growth at the midpoint. Okay. So I like 20%. Would I psychologically feel better if it was 20% versus 19%? Absolutely. I want them to be in the 20s, okay? All right. But is that my main concern or the main interest of the upcoming earnings coming up here on the 27th, okay? No, my main interest is going to be about margins. I'm going to be looking at operational margin improvement, okay, excluding one-time costs of, headcount reduction costs because they lowered headcount, laid off a bunch of people that were not performing. So yes, there may be some one-time increment of charges here, that will reflect in the quarter. We will see. But operational margins, margin expansion of EBITDA, all that good stuff, I'm going to be taking a look at, okay? Because margins at this point in time is really my main focus with this equity in this business, all right? So if you're getting value, thumbs up, like the video. Check out my Patreon, get access to my coveted deep dive collection where I have several deep dive research and analysis on SentinelOne. In fact, I have a deep dive dropping today on competition, and in there I expose competitor weaknesses on forward projected operations that not even the CrowdStrike bears and bulls probably know about. Okay, I've identified a leak there. So check that out. I got a free trial running on the membership. If it's too much, click this button, save 20% paying annually, and therefore, but other than that, try a free trial. If you don't like it, cancel it. All right? No harm, no foul. That's what I got for S on my chest. I'm bullish as ever. I intend to hold these shares for several years with the expectation of the actual investment proposition of a 50 to 100% CAGR annually, going all the way out at least 5 to 7 years. Okay, 50 to 100% CAGR annually. All right, and what do I think is going to happen for the rest of the year? I think we slowly trend up to about $26. Okay, we're going to hold, I got us holding support here, and in a slow trend on the upward trajectory, and along with several analyst upgrades to follow. Okay. I hope you guys got value. Subscribe, like, and subscribe. I love y'all. Thank y'all for your support, and have a good week.
You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes.
One thing to question your mind, it's another to question your eyes and ears.
Remember how you felt when you were alone? That's nothing. You were miserable. That's why we're here.
You're not gonna do it, are you? Change the world. You're afraid.